So in today's video, I just want to go ahead and say welcome to everyone. All I ask for in return is for you to smash that like button to let me know you watched this video, and to go ahead and stay tuned for all the information we have to cover, because we're going to talk about some very important information now. But before we jump into it, I want to let you guys know that I have a Discord, and if you guys are not aware of it, over at the Discord, we discuss about different ticker symbols that have potential throughout the day, when to start watching them, and also for those that are trying to learn how to day trade or learn charts, this is a great place to learn how to actually position yourself to enter and exit using a simulator if you would like, or just watching until you feel comfortable to use your own capital. So this is one of the ones I briefed on early in the morning at 8:57. It was sitting at 389 PBTS. I gave a little bit of news on why it's running, and it went ahead and ran as soon as I mentioned it. From that point, 389 all the way up to 414, pulled back a little bit and touched it again. So it gave us around about 5 to 8% really on the day, starting off the day. That's a great way to start the day. That's all we're looking for, 5 to 10%, no more than that, right? And even, we'll take 3 to 5%. I'm gonna be honest with you, a little quick trade, depending on how much you put in capital, that works out to be just fine. But what we're really aiming for is 10%. Anything above that is a great play, and anything above 20% is a home run, like I like to call it. Now, another one that I mentioned was, and we could see it here, is ears, right? I said it's a good one to watch. This one's gone up multiple times in the last month. Just watch for a pullback. It may run again like it did this morning, sitting at 517. So that was the point to start watching it, and watching it closely. And I just wanted every single investor and viewer to be aware of the opportunity for the pullback that was coming. So we mentioned it as it was actually falling, right, and sitting down here around this area, picked up, and it hit a high here of 543 right off the back, like falling out of the whole entire market. We mentioned it at 9:15. It was sitting around this area. It took off to 543, so it gave us a nice little 5% jump. It pulled down right to lows here, right here around this point of 468, 467, and then it jumped up to 508. That was a nice 10% jump. So here we got around 3 to 5%, and here we got around 8 to 10%. That was a nice opportunity right there for this one, and I had stated watch it closely for the pullback, because the pullback will have a reversal. It's just bound to happen. And you could see here on the RSI and the MACD how it was acting after that peak, and it started to fall, and it hit a bottom here. You could see everything aligning here, reversal, and then from there to here is from here to there, right? And these are the things you're going to learn about also in the stock market and emotional intelligence series, where we're going to talk more about charts and how they react. So if that's something that interests you, come join us. But let's get right into the meat of everything here that I want you guys to be aware of. So the first thing I want you guys to be aware of is the S&P 500, okay? The S&P 500 right now is overall acting a little bit in the downward pressure, okay? I also went ahead and asked people, what do you guys think is going to be the market, right, this Monday? And let's actually look at that. Stated the S&P 500 will be green Monday or red. Thoughts? And one person pointed something out. RSI says overbought. That was a really good analysis from 4570 Henry. And it's interesting that 60% here, which is almost 400 people at least, out of this whole amount here, or I'd say, yeah, around 400 people, thought it was going to be green, and 40% thought it was going to be red. For those of you that stated it was going to be red, congratulations to you guys for actually having some awareness on that. And for those of you that thought it was going to be green, it has nothing to do with not being aware or aware. Just think about what made you think it was going to be green, and why did you feel like that? Were you optimistic? Were you hopeful? Or did you do your research and something pointed you to feel that, right? Or what indicators were you looking at? Or based off of what time? How were you looking at the chart? Because right here, it definitely showed signs that it was going to continue going upwards, but it was bound to have to pull back, and it did bounce back up, and it's pulling down. So basically, it looks like tomorrow may even be red based off the 30-minute, and then when you put the 1 day, it's showing pressure that it wants to go up. But in the long term, in the next few weeks, we may see some more upside slightly. I'm not sure. We got to see, because we got some big dates coming up towards the end of April, which I'll talk about in another video. But this was an interesting poll, and we've been red basically all day, but by a little bit. It's not like we're red terribly, but we've been red. And then on the 30-minute and the 45-minute, we want to go down. It looks like we want to go down. When you put the 15, it looks like we want to go down, right? And we're trying to fight back up. But tomorrow might be red. It just might be red. We'll see. We'll see what happens. But this is what is going to be the most important part of this whole video. And it's the fact that I found this here, okay? I'm not sure if it's still in headlines on Robinhood, but go to the SPY, SPY ticker symbol, and scroll down. You know where they put the news? On Robinhood. If you have the Robinhood app, go check it out. This is the article that is in the headlines. Okay, they're basically planting the seed to let us know that either the SPY is bound to pull back, or they want more people to learn how to buy puts, or they just want people to buy puts without even knowing what's going on, and it's going to drag it down even quicker, right? But one of the biggest things is I've seen a lot of activity in put action. Like, you look at the whole entire volume and stuff, and yeah, there's some big puts being put towards the SPY, right? Like a month out from now, some of them are falling in July, some of them are falling in June. A lot of people are anticipating a little crash or a flash crash or correction towards June, which is totally possible. But this is where opportunity meets the prepared. Now, if you want to read through all of this, it might help, it might not. If you don't really know much about options, this is not really going to help you. This is not going to tell you anything. It's just going to show you a graph. It looks like it's great, you know, and what it means. But if you don't really understand completely options, you actually got to do a course, which that is something I'm probably working on to kind of give more insight to investors. But this is just a brief article telling you about it. But the fact that there's an article on this on the SPY and it's on headlines, yeah, they're trying to push the SPY down. And if not, they're anticipating the SPY to go down. And I'm not one that's very big on puts, but we are in a new market. And if you can make money both ways, you got to just make it happen, man. Because that's an emotional approach. That's something I talk about as well. Once I continue with the series, I'm going to talk about it, how you can't be emotional. And I've caught myself being very emotional about puts because I'm so adamant about being bullish and that the stock markets have opportunities to go upwards. I look for stocks that go up. But sometimes you may even make money while you're buying your positions, doing puts on your favorite stocks or even on your favorite indexes. So yeah, the SPY puts, yeah, this is looking very interesting that this happened. Now, this is another thing that I found very interesting, and it's what Jerome Powell actually states here. And this is what's very interesting. He basically says how we are at an inflection point. If you look up the definition about that, it'll give you a little bit of more understanding for those that don't understand it. But basically that the outlook is bright and that there's substantial growth ahead because the widespread vaccination is strong, with the fiscal support and strong monetary policy support, which is basically what he focuses on. And he feels like we're in a place where the economy is about to start growing much more quickly and job creation coming in a much more quickly manner, right? But that's what he's stating about the outlook, right? Substantial outlook. We're looking like probably 6 months, a year from now. When the Fed looks outward, they're looking long term. They're not looking short term. And he's kind of like just making us focus on the bigger picture, which is good. But also as investors, we want to be prepared on what's going on in between, right? So he basically says how we have a threat that the disease could spread again. And it's going to be a little bit hard for what he says here. It's going to be smart for people to continue social distancing and wear masks because there's going to be a lot of reopening stuff that people haven't done and they're going to want to do, right? So as investors, we need to be aware of that. Now, he also states here that basically throughout this whole process, they've done pretty well at holding down the fort because they didn't know how the economy would perform, how the path of the disease would be, how they would do with the vaccines and so forth. And he basically stated that we spend so much time and energy and money guarding against these things. There are cyber attacks every day in institutions now, he told, and that's a big part of the threat picture in today's world. He's kind of like referring that to the 2008 and some stuff going on that's more like the big dogs, where it's not us retail investors, but that does affect us in a way. And then he states here, and this is right here the most important part. Last month, Powell said that the increase in inflation over the summer months would be temporary and not concerning for its monetary policy at this moment. During this interview, Powell reiterated that the past economic cycle showed that inflation didn't increase much as unemployment went down. That's why he's focusing on more quickly job creation coming in the short term, right? He's trying to focus on unemployment, but if that doesn't work out for him and unemployment either is steadily increasing in a very small manner or stays slightly the same and we have inflation, yeah, he basically has to do this part. And then he says that means that we can afford to wait to see actual inflation appear before we start to raise rates. That's what he said. And then he said the Fed wants inflation to move up above 2% on a sustainable basis before it decides to raise interest rates. We do have the ability to wait to see real inflation, and that's what we plan on doing. So he's allowing things to roll out. He wants it to go over 2%, probably go up to 3%. If it doesn't reach 3.5 or 4%, he's not going to do anything about it. It could shock the markets, and this is where, as an investor, you need to be prepared to strike for the opportunities like a hawk for your favorite stocks, because he's talking about the outlook is going to be great. Then he kind of says here in the short term, we will have inflation, and if things get out of hand and unemployment is not really going down, then this statement right here, right, inflation didn't increase much as unemployment went down, is actually canceled out. And then he's probably going to have to say, oh, well, actual inflation has appeared, unemployment is not going down, we're going to have to raise interest rates, and that's going to be even bigger issue. So then there's people saying that we're going to be in a flash crash, there's people saying that we're going to be in a correction, there's people saying that we're going to be in a sideways W movement, but a constant W, like up and down, up and down, up and down, until we get through this storm, we stabilize, and then the outlook that is so bright and great that is stated right here, the outlook that is brightened substantially, may start to reflect in the market, and the market will start to work its way up. So what do I think about the S&P 500? Well, we are set to pull back a little bit, but right now in the short term, based off the history, right, I'm going based off of the last time that we went above the overbought section. We're not that far up from it. So basically we're sitting right now at 76. It has to get closer to the 80s before there's a pullback. That's just my opinion. I could be completely wrong and won't play out the same. And if not, you can use this older example here, and you can use the one up here, that we are pretty close. We're not that far from it. We're sitting right now at 76. So like 4 more points, maybe up to, another 10 points. So anywhere between 4 to 10 points above the overbought, and then we'll start to actually turn around. But on the 30-minute, we've been playing around up and down, and it's been pushing up. Every time it kind of comes down here to the 50s, it bounces back up on the 30-minute, which is what continues to take the market up to newer highs. But that point will end. I said it. If we get to 4,100 or 4,200, we're going to touch it, and we're going to start pulling down. We're going to start pulling down significantly, and we can probably end up somewhere in the 39, 38, worst case scenario 37, and the ugliest of the ugliest 35, 32. I've said this in previous videos. So right now, there's room to the upside to get closer to 42 or the high 41 mark, but it's going to take a lot of pressure to get up there. And once we get up there, just be ready, because there will be a pullback, and it'll be close to the 38, 37 range, best case scenario 39, and then we'll have to see how inflation, if cases aren't rising, and also if unemployment is going down, because inflation can go up, but as long as unemployment week over week is going down or being tapered, right, like hold down the fort, being controlled, then inflation will suddenly start to fall on its own, because unemployment, the workforce is out there. But if we got unemployment skyrocketing, we have cases skyrocketing, inflation is here, The stock market will be shocked and things can get very interesting and ugly, but you have to be sure you're in stocks you like, because after this storm, according to what the Federal Reserve is saying and what everything out looks like, right, and all the analysis ratings, in the long term, there's going to be an opportunity to see those gains by striking on all those opportunities. As always, guys, I hope you guys learned something new. Thank you guys so much for watching. Share this with your friends and community so others are aware, and let's make some money.